Good afternoon, everyone. I welcome you to the 52nd webinar of Zen Tax Clinic. We'll begin the webinar shortly in another 5 minutes. So please be patient.
A very good afternoon to you all. This is we can say, now Pushpa 2 has come. Just like that, this seminar is a consequence to the seminar that we had, our webinar we had in the last week. See, last week, the session was extending. There are many questions that could not be answered during that stipulated time. So we thought, okay, it is our duty to clarify all the doubts that is raised by the participant, because participants' interest is very much has to be seen by us. So we thought, yes, let us have one more webinar to give the answers to the questions raised to the earlier session. So we can say this is, as just I mentioned earlier, Pushpa 2, you can say this is our webinar on GSTR 999C part 2. Okay. So here first we are going to take up the questions that came in the chat box last time, but which could not be answered or which could not be replied properly due to paucity of the time. Because everybody is allotting only 1 hour, and then we do not want to extend that by another half an hour, because that will not be possible also due to some other restrictions. So we thought it is better to have another session whereby we will be able to give the clarification or replies to the queries raised by the participants for the earlier webinar. Due to that, we hope that the persons who raised those questions in the earlier webinar are part of this webinar also, so that they will be getting the benefit out of the queries raised by in the earlier webinar. Now, the questions raised and then the possible solution. See, there could be some possible solutions only, I am saying, because there are 2 or more ways of putting the figures, but where to put, that is ultimate thing we have to see. The fundamental of GSTR 9, I would say, is you can report additional tax liability. See, as I used to tell, government is much more interested in collecting money only. Okay, so you can declare the amount of sales which was now omitted to be declared in the returns filed during the financial year 23-24. But the ITC cannot be claimed more than what you are claimed in the returns, 3B returns filed by you during the financial year 23-24. So you have to be very, very careful that the ITC component that is populated in GSTR 2B is very, very important criteria. So that is one of the major change that has taken place in the form with regard to the auto population of the ITC. The auto population of the ITC, earlier it was based on 2A. Earlier it was based on 2A. Now it is based on GSTR 2B. Yes, you will be knowing the difference between GSTR 2A and then 2B. See, 2A was not very popular because it was a dynamic statement that kept on changing. Suppose a person is putting the invoice relating to 23-24 now, that will go into the GSTR 2A of 23-24. Okay, so when he made that entry, all those things have to be, keep on following it every month. What are the items added to that? So that was the issue. But compared to that, GSTR 2B is a static one. So whatever is reported up to 11 will get populated in GSTR 2B. So the supplier who is filing GSTR 1, on the basis of it, the GSTR 2B is derived. So irrespective of the period for which that invoice relates, except which is falling outside the 16(4) time limits, all those things will be getting populated in GSTR 2B. So that is the base document for us to take the credit for ITC. Because now there is a section 16(2) which stipulates that you can, one of the conditions for taking ITC is it should have come in the GSTR 2B as filed by the supplier of the goods or services. So if any violation of these conditions will make you to bear the penal consequences. So in that context, GSTR 2B has become a very utmost sacrosanct document, I will say, for the purpose of taking ITC. So the purpose of this table 8 is to reconcile the whatever the ITC that is getting populated in GSTR 2B with the amount you availed. Practically it may be different. Theoretically, there should not be any difference between the ITC taken by you in 3B and then what is populated in GSTR 2B. So in that situation, you have to fill the forms properly so that there is no difference. Because see, whenever you are filling this 8A, that is the auto-populated figure from GSTR 2B. Okay. Then other forms also getting from table 6B and then table 6H. So that is also getting auto-populated. At the end, there is a small formula that should come as a 0. If it is correct, then it should come as 0. So that you have taken the ITC only what is populated in GSTR 2B. So if at all, if ITC, the table A is not properly filled up, it may show that you have taken excess credit. So whenever that shows you are taking excess credit, naturally notices will come. Already, whenever you are taking excess credit, the monthly notices will come. But in the aggregate, also if it is seen that you are taking excess credit as populated or more than what is populated in table 8A, then there could be notices from the department. So in that situation, filling this form is very, very essential in a correct manner. So the appropriate form and where to put the figure, what figure that has to be filled up, that assumes very, very crucial importance. And also this ITC is very much assumes importance because of the change system of filling the GSTR 3B. Okay, now we have to take the figure from all other ITC. I'm telling mainly they are concentrating on all other ITC. Why they are concentrating on all other ITC? Because if you are the first one is you are getting ITC from import of goods. Already goods are coming to India, then it is from the customs portal and also import of services, everything they got other evidences. But all other ITC becomes a it is a combination of all the items that you are coming into the ITC pool. So 485 in the 3B assumes very, very crucial importance of all other ITC. Only this all other ITC is getting populated in GSTR 9. So you have to make the proper filling of the other tables, because what is coming in the table 8 of the GSTR 9 is very much dependent on the figures that you are going to fill up in table number 6 and 7. So that is very, very important. So on that basis only we are taking up the questions that came up in the last meeting. And also, if you got any questions during the current session also, you are welcome to put your questions in the chat box. We will be answering to these queries. Thank you. Now the questions and then replies will be given by Jayamohan Chadrakondan. Over to you, Jayamohan.
Thank you, sir. So we'll get started with the questions which our attendees have shared with us during the last week's session. So the first question is GSTR 9A limit. So what is the time limit means? Turnover limit, I assume, because the question is not clear as to what limit that the person has intended to communicate. So GSTR 9 is not presently applicable. It is for the composition dealers. It was applicable before, so it is not currently applicable.
Yes. See, composition dealers is the dealers who have got a turnover up to 1.5 crores. So the limit is 1.5 crores as per section 10, not section 10. It is stipulated in the rules also. The rules are specified that up to the 10 crores they can go for if they are good at dealing in goods, and then services there is a separate limit is there. So 50 lakhs only for services. So that is the limit fixed for composition dealers. So, but the exemption from annual return filing is given for the persons having the aggregate turnover up to 2 crores. So naturally, this composition dealers limit will be less than 2 crores. So there is no need to file this GSTR 9A. This is our opinion. Okay.
Moving on to the next question. There is a discrepancy amounting to rupees 60,759 each in CGST and SGST due to some adjustments made in GSTR 1. where certain intrastate B2C supplies were mistakenly classified. These were later corrected as B2B interstate supplies, resulting in a reversal that showed as a negative value in GSTR 1. However, since 3B does not accept negative values, this created an overstated liability, which was temporarily offset by increasing the ITC claim by the same amount in GSTR 3B. How to show this in GSTR 9 or 9C? This is the question. So, see, there is a little bit of confusion because what the question has mentioned is that B2C supplies and B2B supplies were interchanged. So this is what I understand from the reading the question. So if this is the error, then correcting it will not result in additional liability or a negative liability as which is stated in the question. So I think we need more inputs to answer this question. So the person who has sent this question, please email us with the.
Yeah.
Yes, sir. Okay.
See, the question is, they have put the B2C in B2B. Okay, that is the issue. B2C has been put in B2C. So the problem will come when the problem will come. Okay. See, suppose they have declared a turnover of say 15 lakhs in B2C. So 15 lakhs wrongly reported in B2C. So next month B2C they have put. So next month they are going to correct this 15 lakhs as B2B. So from B2C it will go to B2B. Okay. Now in that month there is no B2C sales at all. Now there is no B2C sales. Then how to adjust? Because if you are putting a negative values, it will not accept it. So it will not accept it. So that is the reason when you are putting it into this one, naturally this will flow as a output tax liability, and then you cannot adjust the negative values. You have to wait for the time till when you get the positive values. At the time only you can adjust it, and you cannot adjust the negative values in GSTR.
And also about the ITC claim to offset, it will amount to excess claim.
Yeah, ITC claim. See, ITC claim is only from, it should flow from GSTR 2B. So now GSTR 2B is the document from which the ITC should flow. See, previously we were telling, we were taking various issues before the appellate authorities or before the show cause notice adjudicating authorities. Once we are getting the goods and then we have made the payments, our position is very clear. Then there are some decision, DigiTale enterprises. Also to get over this only, now they introduced this AA, 16 to AA, to emphasize the point that you are section 16, subsection 2 specifies the various conditions for taking the ITC. One of the conditions is they should have a tax invoice. Okay. Then the goods or services should have been received. You should have filed a valid return. And these are all some of the conditions. So one more condition was added. One of that condition is introduction of AA. So according to this one only, they make that ITC that you are eligible should be populated in GSTR through 2B through the GSTR 1 filed by the supplier. So when you are not going to when you are going to take a ITC which is not based on GSTR 2B, then the issues will come that will take into the you are claiming as if you are claiming an excess ITC. So that is an issue. So you cannot do that, then it may be resulting in a problem for you also. So in this situation, you cannot take the excess ITC.
Fine, sir. Moving on to next question. If we download an offline tool for GSTR 9C, then how auto-populated figure from GSTR 9 will reflect in appropriate column in 9C? Whether we can fill based on system generated PDF from 9C. Yes, sir. You can, after filing GSTR 9, you can download a system generated 9C. In that PDF file, the values will be auto-populated from GSTR 9. So you have to ensure that while filling the respective values in the offline tool, you have to ensure that the exact values which are reflecting in the system generated summary is filled in the offline tool also. You can do that, sir.
See, to supplement what Jaimon told, see, this brings us an additional responsibility or additional caution to fill the GSTR 9 properly. If we are not going to fill the GSTR 9 properly, the effect of the same will spill over to 9C. So both the 9 and the 9C will become erroneous documents. So the document not properly filled up. So in that situation, you have to be very, very careful in preparing the base document GSTR 9. So that has to be seen. So once you fill up the GSTR 9 properly only, you will get the correct figures in GSTR 9C.
Yes, sir. So how do we deal with this spillover effect? Sales of financial year 2022-23, which were amended in financial year 23-24 up to October 24, all question with respect to inputs. So I will break the question into two parts. First is how to deal with this spillover effect. So the turnover pertaining to financial year 22-23, which is reported in which is amended in 2023-24. So these amendments need not be reported in GSTR 9 because it pertains to financial year 22-23, and while filing, ideally it should have been reported in the annual return of financial year 22-23 itself. So during filing the annual return for financial year 23-24, these adjustments need not be reported. So anything to add?
Yes. See, as Jemon rightly pointed out, see, anyone who is going to fill up this GST at 99C, kindly go through the instruction given at the end of the form. So in the PDF, in the government released form, they given the instructions. They say there is the instruction number 2A. They say in the table against serial number 4, 5, 6, and 7. Okay, 4 is the reporting of the taxable outward supplies, exempted or other supplies not attracting the GST will be reported in GSTR 5, and the GSTR 6 and then 7 ITC related details. So they say for these details I shall report the values pertaining to the financial year only. So what is happening during the financial year 23-24 only should be reported, not the earlier reporting. So going from there, suppose you are there is a sale, say at the end of the 31st you have made a sale for 15 lakhs, and then with the or 10 lakhs, you assume it's the 10 lakhs, and then with the corresponding liability there is a tax effect of 1,80,000, 18% goods. Now that has been omitted. So how to do that? How to put this omitted amount here? So for that you can use the first you fill up the supply made to, suppose we are assuming B2C, you fill it in 8A. So in this there is a provision for amendments made during the year. So that you can say, see, that is a part 5, particulars of part 5. See, this part 5, the heading is particulars of the transaction for the financial year declared in the returns of the next financial year till the specified period. So what is the specified period? Specified period they refer to 16/4 time limit. So up to 30th November. So suppose if it is getting reported, here you have to report supplies or tax declared through the amendments or debit notes. So here you have to put. So this question which is relating to 22-23, they should have reported in the previous year GSTR 9 itself the amount that actually happened, and then the amendments are the which was reported in the next financial year reporting, that is 23-24, that should have been reported in table number 10.
Okay, sir. So the same person has also asked, is it mandatory to give the breakup of input capital goods and input services? So these details have to be filled in table 6B. So for the capital goods, you have to show it separately. Inputs and input services, you may in a consolidated manner show it in inputs itself. But for capital goods, you have to mandatorily disclose it separately.
Yes, what Jemon said is correct. So the segregation is required for capital goods, inputs, and then input service can be added. But the important point that has to be noted is the inputs and then input services added figure should be shown in the inputs only. You cannot change it. So this is becomes a common one. So I can put it in input services. As per the instruction, whenever you are combining the inputs and then inputs services ITC, that has to be shown in the inputs column only, or which is relating to inputs, not in the input services. So that has to be very, very carefully seen.
Okay, sir. So next question is, how shall we declare the sales details of vehicle on which we have paid on margin of supply? So there is an option through, I don't recollect the number of the notification, exact notification, but there is a scheme, a margin scheme is available for sale of second-hand vehicle. So in this scheme, the written down value of the vehicle as per Income Tax Act and the sale value is compared, and the difference for the margin, if at all the sale value is more than written down value, for that margin GST will be paid. So the invoice will also be raised on the margin amount itself. So in that case, you would have reported that invoice in the GSTR 1 itself. So that value you have to, if it is B2B or B2C, like that, you have to segregate and report it in table 4 of 4A or 4.5, 4A or 4B accordingly in GSTR 9.
Yes, yes. No.
Okay, right. Need to explain 6H and 6M.
6.
So H and 6M. Yes. See, 6H refers to the reclaimed ITC. One second.
6H in 6.
6H reclaim.
See, the question is, what is has to be reported? ITC reclaimed 6H. 6H refers to amount of ITC reclaimed. Amount of reclaimed. So that is the amount that has to be put it here. So what is that amount? 6H it should come. So here they have given the clarification. What comes in 6H? Okay, the notification in the guidance. Aggregate value of what the cell 6H should be represented. If this is as per the instruction, aggregate value of ITC availed, reversed, and reclaimed under the provisions of the Act shall be declared. So all these three should be there. So that is, you should have claimed ITC, then you should have reversed and then reclaimed. So all these things should be there. So typical example is with regard to the temporary reversal. As I mentioned, section 16(2) stipulates the conditions for taking the ITC. One of the conditions is goods should have been received. So if the goods are not received, you are not entitled to take the ITC. For example, a seller from Delhi dispatches the goods on 28 January 24. 28 January 24. Okay, he is dispatching the goods to Coimbatore. So these goods will come in the next month only. In the 28. See, 28th January. 28th January it is coming. So it will come, he will put it in his GSTR 1. So he will be putting it in GSTR 1, but the recipient in Coimbatore will be getting the goods in February only. So he can take that ITC only in the month of February. But this amount will get populated in GSTR 2B of the recipient situated in Coimbatore. Okay. So you have to show in 4A5 of GSTR 3B. So that is, you are the ITC that comes in GSTR 2B, you have to show, and then you have to reverse in 4B2 as a temporary reversal in GSTR 3B. So this is a reversal in the month of January. Okay. February, you will be reclaiming that amount. So February, you will be adding it to the all other ITC, and you will be reporting the same in 4D. So that is out of the already amount reversed, then how much you are claiming. So that you will be putting in here. So that this will not form part of the ITC ledger. Only what is populated in 4C will go to the ITC credit ledger. So the amount, what you have to put here is in 6H. is it should satisfy all the three conditions. That is, you should avail the ITC. So in the month of January, you have availed the ITC, and also you have reversed that ITC, and then also you have reclaimed that ITC. So all the three things should happen during the financial year 23-24. So that is very, very important. But take the case of March. Similar situation. March, he is putting the Delhi person. March 28th, he is sending the goods from Delhi. But you are getting in April only. So here what you will do? You will only reverse that amount. You will not reclaim during the financial year. Because the goods have come in the next financial year, you can reclaim that same only in the next financial year. Next financial year, that is 24-25. So that amount, that is the amount of temporary reversal that happened in the month of March, but you reclaimed it the next year, that only should come in 6 sketch or other reversal. So that is the main difference between the 6 sketch and 6 sketch and then
6M
or 6M. 6M.
6M.
So that. So
Okay. 6M is actually different.
Hmm.
6M is a different table. Actually, 6M is where we have to report any other ITC. Any other ITC, for example, if you have transferred your business and you have filed ITC 02 and you are getting an ITC through that form, then you have to report it in 6M. This is only in specific special situations. ITC, you have to report here. All other ITC, there are respective columns, respective tables from 6B to 6N, 6L. There are respective tables even for transcript and all other ITC. You can report over there. In 6M, if there are any other ITC like in ITC 02. Yeah.
Same. Suppose you are buying a business as a whole. You are buying a business as a whole. The ITC. Suppose you are buying a business as a whole from another concern. Okay. The closing ITC in the credit ledger can be transferred to your account because you have purchased and then you have become the owner of that company. So there is a sole proprietorship concern. You are a private limited company. From the sole proprietorship concern, you are purchasing the entire business of the sole proprietorship concern. The ITC that was lying in the sole proprietorship company should get transferred. For this, you have to file a form ITC 02. Through that, the credit will flow. That credit has to be reported here. 6M. That is all any other ITC available but not specified above. So that you have to show it in 6M.
Okay, sir. Next one. Temporary reversal table as per GSTR 3B declared in 4B2, where should it be shown in GSTR 9? So it should be shown under table 7H. Table 7H. Other reversals, you can disclose that.
Yes. See, as I mentioned earlier, see, 6 sketch, only if the amount is reclaimed during that year, it has to be reported. If it is not reclaimed during that year, it need not be reported here. See, because why this, now the question, the corollary to this is coming 6B. 6B. See, 6B will include the original amount, original ITC that came from the supplier and also the reclaimed by you. So the question is, you have to put the original amount or that you reclaimed subsequently. In my opinion, in our opinion, but we have to put it the total amount that is reclaimed and also what is that amount available here. So then only that you will be that table 8B will be getting satisfied because 8B. So we have to put that amount adjusted in negative figure. So 6B and then 6 sketch will be getting populated in 8B so that the amount of ITC populated as per 2B will match with the ITC availed by you, including the reversal and the reclaimed amount.
Yes. So we are manufacturing machines, which is the main business. Apart from this, we are having one solar and windmill unit. Since it is exempted from GST, we don't claim any ITC for the goods or services expenses with respect to solar and windmill. You kindly inform whether common credit reversal will apply for us because we are not using any inputs or services of the main business, that is machine sales. Clarify if we need to reverse, what to reverse. So this requirement to reversal comes from section 17 subsection 2 read along with rule 42 and rule 43 of GST rules. So according to this, if you are using your input services or capital goods both for affecting taxable and exempted supply, then proportionate ITC which pertains to exempted supply has to be reversed. So in the question, what he has mentioned is that for the exempted supply for solar and windmill, the respective expenses, the ITC related to those expenses, they are not claiming ITC. So whether common credit reversal would apply. So if you read rule 42, there is a specific formula as to how you have to arrange common credit. So it starts with the inputs which are exclusively used for input services or capital goods which are exclusively used for taxable, providing taxable supply, that you can claim fully. So like that it starts, and at the end the common credit will be at the end you arrive at the common credit. So to just say an example, this company would be subjected to audit. So an audit service, you cannot really differentiate between the manufacturing unit and windmill or solar. It is not possible. So it is definitely a common credit. Like this, there might be other services also that the company is availing, which might fall under the category of common credit. So in my opinion, a common credit reversal will apply for your concern. Is there anything to answer?
Yes. See, to add to the what Jamon said, it is very, very correct. Okay. Rule 42 has to be invoked for inputs, rule 43 for capital goods has to be invoked. Okay. So first one is whether this solar unit is an independent unit or you are having a using it for your own consumption. So if it is you are using it the power generated, then it is for your own consumption. Surely you can take the ITC. But from the question, I think it is a separate unit and then you are selling to third parties or selling to the board. So in that situation, electricity being an exempt supply, you cannot take the ITC. So what will the first, as Jamon pointed out, if it is related to an exempted product, for the exempted supply, then you cannot take the ITC. Suppose here you are going to engage, use that solar generators only for affecting the supply of electricity to other units, and then you are going to get that money for the sale of electricity, then whatever the expenditure and then related ITC should not be claimed because it is straight away related to an exempted supply. So as he rightly pointed out, only the common ITC will be reversed, should be reversed in the proportionate of the exempted and then taxable supply. So that has to be reversed. As he mentioned, audit fee, if it is an audit fee, it is for the total. Sometimes even the rent, you can say rent, you are having a common office. From that, you will be operating the machinery manufacturing and then also the staff of the windmill or solar energy section will be operating. So that is also the rent ITC has to be apportioned in a proportionate manner. So this is has to be done and then that has to be reversed if it is a separate unit and then you are deriving income from the sale of electricity.
Okay, sir. So next question is land sale and trust donation and receipt. Where to mention GSTR 9 table 5. So I think you are only left with non-GST supply. It is the only table where, if at all, you need to mention this turnover.
I think
donation transaction.
no GST supply is not portal. So As rightly pointed out by Jayamohan, table 5F will be the appropriate table to fill up this.
Okay. So if gross ITC is reported, table 8B shows negative figures. If net ITC is reported in 6B, 6J shows difference. So how to deal with this? This is the question. So this point I think we already discussed. This point we already discussed how to report the figure in table 6B. And also
you put the gross ITC in 6B and then amount of reclaim you put it in negative so that you will be getting the amount correctly in 8B.
Then ITC for financial year 22-23 taken in August 23. Where to mention this ITC pertaining to previous financial year. Okay. So there is no table as such to mention this ITC pertaining to previous financial year, preceding previous financial year actually. So claimed in previous financial year. Most of the tables, but they have given options to report ITC pertaining to financial year 23-24 that is claimed within the stipulated period, that is November 30th, during 24-25 financial year. That is available. But for 22-23, and you have claimed ITC during the 23-24 financial year, there is no separate table to report this transaction. Sir, your opinion.
See, they were given an advisory. See, as far as the GST is concerned, I used to tell there are so many authorities. Okay, the first one is the Finance Ministry, which formulates the law. Then it is CBIT, Central Board of Indirect Taxes and Customs. It forms the rules and everything. But above all, there is only almighty, all-powerful authority. Who is that authority? GST network. So GST is the network that has given an advisory on these matters. How GST can give an advisory? That's a big question. But they have given a question. So, but I do not concur with this view. They say this is question number 4. Invoice belongs to 23-24, which is appearing in the table 8A of GSTR 9 of 23-24, as the supplier would have reported the same in GSTR 1 after the due date for filing the GSTR. See, March 23 he should have filed, but he has not omitted. How to report this transaction in GSTR 9? So they say the above value need not be reported in table 8C and then table 13. They need not be. This is in line with the instruction. They say it is in line with the instruction. But if you do not put anywhere, then you see it will show as if you have claimed a lesser ITC. So this, and also they very much say, as I have already mentioned, there is a instruction number 2A, which says the table 4, 5, 6 should have the details of current year financial year only. So since it relates to earlier financial year, you need not report the same. But if you do not report the same, naturally some difference will come. So difference will come. So that you have to put it in such a way back to report. So already some reversal or something you have to put, and then you have to tally it within 8B or 8 and you have to tally. Otherwise, it will show that the amount is getting populated, but you have taken a lesser credit. So that has to be seen.
We don't have any column in 8 ITC for import IGST available in 2B, but available in 24-25. There is no separate column in the
See, We do not have separate column in GSTR. It is for import of IGST available in GSTR 2B, but available in 24-25. First of all, as here 8G, IG is paid on import of goods. That is a separate column. ITC availed on import of goods. That is a separate column. That comes from 6E. 6E. So here there are separate columns. One is IGST paid on import of goods. It may be from the GSTR. So this is the amount that you paid, but due to some reason you are not taken the ITC. So that is the difference. It will come. It is auto-populated in 8I. So there is a separate place in table 8 to report the ITC that remain unavailed. But the sad point is, see, in the 8K, the total ITC to be lapsed in the current financial year. They say it should be lapsed in the current financial year. It will not lapse, to my knowledge. It will get carried forward the next year. Okay. So there are places to describe to give the details of ITG available in DAB, but available in 24. So here, 2B amount will be coming. ITC paid on import of goods will come in 8G, but availed will come in 8H. So here you can mention this. So the balance amount will automatically go to next year.
What details usually left out in monthly returns to be declared in 9 and 9C?
As I mentioned earlier, government is only interested in collecting the money. So if there is a omission of the sales invoice, you can put it here and then you can pay the appropriate taxes to, and then you can go there.
In order to correct reconciliation of table 8 arrival, re-avail of 180 days reversal to be shown in 6H or 6M.
6H?
I think 6H, it should be reported in 6H only.
6H. See, that is, I'm telling you 6H. If you have 6H, all the three conditions has to be, so availed, already you availed that one. Okay, reverse. If you are reclaimed, then only it should be shown here. Okay. Suppose if you are not only reverse and then you are not reclaimed, it should not come here. It should not come here. It should come. See, this amount you will be putting it in minus figure. This figure 6H, you will be putting it in minus figure. So whenever you are not re-availing it, ITC not re-availing, you put it in other reversals. Okay.
Can you file GSTR 9 for 2023-24 without filing previous year 22-23? On both years, turnover is about 2 crore. Yes. Yeah. So, actually, I think the system does not actually block the user to file GSTR 9. Might be it is a different case with monthly returns. The system does not allow you to file return GST 3B return for subsequent period if you have not filed up to the previous period. But for 9, I think you can file it for the current year. Where to show the past year ITC in 6B or 6M? So I think this is a continuous question. Anyway, we have answered it in the previous question itself. How to compare income tax return details with GST returns and how to rectify while filing GSTR 9 or 9C. So GSTR 9 is prepared on the basis of fundamentally the details from GSTR 3B and GSTR 1 is compiled and it is populated to GSTR 9. And while reconciling the turnover as per audited financial statements and the turnover reported in GSTR 9 in form 9C, so at that point of time, you will start with the turnover as per audited financial statements. So the revenue from operation and other income, which forms part of profit and loss account, has to be reported over there. And then other adjustments. See, there might be a situation where the branch transfer, which is the deemed supply under GST, is not considered as a revenue in the audited financial statements. So similar transactions will be added to the turnover reported in audited financial statements to arrive at the turnover as per GSTR 9. So like this, you have to prepare a reconciliation statement and see if there is any income that you are reducing from audited financial statements to arrive at the turnover reported in GSTR 9. If there is an income that you are reducing, then you have to have a very good explanation for reducing that. It might be, for example, there might be an Ind AS adjustment that you have done in your books of accounts, and that you are reducing it from your AFS turnover. So that is permissible. You have to have a clear explanation for the amount that you are reducing from audited financial statements to arrive at the turnover reported in GSTR 9. That is how you reconcile. Is there anything to add on that? Okay. Yeah. Moving on. If supply has wrongly been declared as non-GST supply in GSTR 9, can it be rectified as exempted supply in GSTR 9? Sorry, GSTR 1. Can it be rectified as exempted supply in GSTR 9? Yes, you can report it as exempted supply in GSTR 9. And later on, if the department is asking you a question or a notice comes, at that point of time, you can explain that at the time of filing monthly returns, you erroneously reported it as a non-GST supply in GSTR 1, and later on at the time of filing GSTR 9, you have corrected it. That is possible. So, can you get GSTR 9 and 9C mandatory and optional tables list? And we'll send it across to you in email. So, inputs in respect to month of March 23 is being reflected in financial year 23-24. GSTR 2B, how to treat the same in table 8 difference. See, I think this question is already answered, but inputs in respect of March 23, it is already answered. So the questions, especially pertaining to table 6 and table 8, if we answer it multiple times, it will definitely create confusion to the attendees, is what I feel, sir. You have explained it well enough. So if at all you have any other specific doubts, please come up with those doubts. So temporary reversal table as per GSTR 3B declared in 4B2, where to show it in GSTR 9 is already discussed. It should be reported under table 7H. Any penalty for non-filing of GSTR 9C. So there is only late fee as such, but the department specific penalty. We'll check. Okay, we'll check and get back to you on this. But there is late fee if you delay filing GSTR 9C.
But there is some Kerala High Court decision. The late fee is applicable only for GSTR 9 and not 9C. See, the department wants the late fee both for 9 late filing and the 9C. They take it as a separate ones. But because late fee is applicable only for the returns, whereas 9C is a reconciliation statement, it is not a return. So that has been accepted by the Kerala High Court, and then they said it is only applicable for the GSTR 9 and not 9C.
Okay. So in audited financial statements, other income, what are the treatment in GSTR 9? Kindly explain. See, the other income, as I mentioned earlier, you have to categorize it into exempted supply or other taxable supply, or as per the nature, it's non-GST supply. Like that, you have to categorize based on the nature of exempted income, and you have to ideally report under table 5 or table 4 of GSTR 9. That's how you have to report it. So, what is the difference between 6B and 8B? 6B and 8B. 8A and 8B are.
8B is a auto-populated amount. 8B is a auto-populated. 8B will, the source is 6B. 6B. So 6B, summation of 6H will be the coming in 8B. So that is the important criteria. So the sum of the 6B. So that is why I am mentioning, see, 6A is auto-populated from GSTR 2B. So GSTR 2B, it is getting auto-populated. Okay. So if you are going to report it correctly, suppose, assume there is only one transaction. So there is as I mentioned, the goods have been dispatched in the month of December from Delhi. So on that 1 crore worth of the goods, on that 18 lakhs is the IGST. Goods are not come. So you will be reversing that amount. So you will be reversing that amount and then reclaiming it in the month of January. So January. So what is the amount that will get populated in 8A? 8A will be showing only 18 lakhs. 8A will be showing only 18 lakhs. But whereas here in 4A5, it will be showing the amount of 36 lakhs. Why 36 lakhs? In the month of January, in the month of December, you might have taken as from the GSTR 2B, and then you might have shown in 4B2 as a temporary reversal. So in the next month, you will claim it. Next month, you will claim it. So that amount that is getting populated will be double that amount. So that will be 36 lakhs will come. But it should match with your 2B figure. 2B figure are getting auto-populated in 8A. So what to do that? So only thing is you have to use the table A 6H. 6H, you put it in a negative figure, 18 lakhs. So 6B plus 6H will come in the auto-populated in 8B. So that again will become 36 lakhs. So there is no difference between the auto-populated amount in 8A from 2B and then what you have claimed. So in that way, it will become nil.
So can we correct auto-populated GSTR 9 when the figures are matching with GSTR 1 and 3? Yes, you can correct. You can manually edit the figures in GSTR 9 and fill it. So aggregate annual turnover is exceeding 5 crores. However, in Tamil Nadu, turnover is 4.5 crores. Whereas turnover in Karnataka is 50 lakhs. GSTR 9 and 9C to be filed for Karnataka GSTN as the turnover is less than 2 crores. So
yes,
yes.
Because very much yes, because it is only aggregate turnover. So you have to file GSTR 9 and the 9C in both the states.
Yes. Aggregate turnover based on PAN. In some cases, table 8A as per GSTR 9 and 2B downloaded figure has some differences. See, if there are differences, it might happen in specific cases, there might be some differences. So what you have to do is you have to get the bill-wise details of GSTR 2B and reconcile it. If there are any differences which you are unable to report correctly, you try to make adjustments in table 8C. If at all it is not matching those kind of differences, you try to make adjustment in 8C. In portal, it says we can file GSTR 9C only after filing 9. So that means we have to file 9 very early to have auto-populated 9C and compare it without working. See, once you file GSTR 9, immediately the auto-population will happen and the system generated 9C, you will be able to download it from the portal. So it will not take more than even 2 to 3 minutes. It will not take. So that is not an issue, sir. GSTR 3B summary overstated due to duplicated invoices, not corrected subsequently. Books and AFS shows the right turnover. Where do I reconcile this difference in case of zero rated supplies?
Remember, zero rated supply, we assume exports. Exports, there cannot be any difference because you have to see the table 6A. That cannot be any difference. So whether tax exempted, they're not clear about this question.
Yes, there is some kind of ambiguity. See, you can write this, mail us and rephrase it correctly, sir.
Yes. Can you go to that? The questions that have come this session.
And I'll read out the questions, sir.
GST 9 as audited deadline. See, back to show ITC reversed and then reclaimed in the financial year 23-24, already explained. So that is amount reclaimed. So what is the amount in 6B is including the reclaim. So what is the amount reclaimed? That is in that which is included, that you have to show in a negative figure in 6H.
6H and 12 and 13.
6H and 12 and 13.
Yes, sir.
The reversal of ITC availed during the previous reversal of the ITC availed during previous financial year. See, we should check and then come to you this one 6H.
Read out this thing. I think, for the attendees also that we will get that. So financial year 22-23 ITC taken in financial year 23-24. Which column I show it in GSTR 9. In ITC shown in GSTR 2B financial year 22-23.
22-23 taken in 23-24. See, that is what the department is constantly telling. See, this table number 5, 6, 7 are relating to only for the current year. So you need not show the amount anywhere.
As per the GST advisory on 9 December 2024, department saying a report reclaim of ITC for an invoice which belongs to financial year 23-24 and which is claimed, reversed and reclaimed in the same year under 6B or 6H is sufficient. But we shown there it will double in table 8B. You are right, and sir has also explained.
See, that's what you put it 6H in a negative figure. Negative figure. So negative figure you put it in 6H. It allows the negative figure also. So in that area it will get this one. So in that way it will not get doubled. So if you're putting in a negative figure, so the actual amount will come. I gave an example, 1 crore and then 18 lakhs, how to put it. So because 4A5 will be coming, what is you will be taking auto operating in GSTR 2B, and then whenever you are reversing, reclaiming it, again you will be putting that amount of 18 lakhs. So the correct way is to report in the negative figure as minus 18 lakhs, so it will get the tally.
Is rule 37 fill in GSTR 9 compulsory?
Yes, rule 37, because there is a specific column. See, 7A, separate column. So separate column, it is very much essential that you fill in here, fill it here.
Okay. So GSTR 9 not filed for financial year 2021. What is the last date for filing GSTR 9 for 2021? What is the calculation of 9 late filing fees and penalty? So this is for financial year 2021. I think there was an extension available due to it was a COVID period. So we will get back to you on email, sir. Land sales we have already discussed. ITC amount transferred to reclaimable ledger during 23-24, and the same has been reversed as ineligible in 3B for the financial year 24-25. How to report it in GSTR 9 of 23-24?
This is 4B2. Now, during that 4B2, and then being ineligible, you are taken it as a ineligible. So, as per the instruction, this amount that is the ineligible will not come during in the 23-24 GSTR 9. Only it will be coming in GSTR 24-25. So it will not be coming here.
For trust, sales includes donation, fees and other receipts, or only sale include fees and Other receipt donation to be included in aggregate turnover for 9C or not.
Yes, donation has to be included in for the aggregate turnover.
Financial year 22-23 inputs getting reflected in 2B of financial year 23-24 in table 8A of GSTR 9. How to report this difference in 9 and 9C?
See, financial year 22-23 inputs getting reflected in GSTR 2B in the table 8A. How to report the difference in GSTR 9 and the 9C? See, this advisory given on December 9 deals with the same situation. Invoice having date financial year 23, but supplier is reported in GSTR after March. But this is 22-23. Yeah, that is also there. Okay. Invoice 22-23. The invoice belongs to 23. This is number 4 point, serial number 4. See, in this advisory, they are answering 5 questions. So, but here they are dealing with the one question. Invoice belongs to 22-23, which is appearing. This is ITC for 22-23, but it was auto-populated in table 8A of GSTA 22-23. In the table 8A of 23-24. So here they say above value may not be reported in 8C and table 9 for the financial year 23-24. But as you mentioned, when you are not putting this, then there will be a difference amount that is, but this is the amount will be, the ITC claim will be lower. So lower, so it will not be a problem. I think it will be a problem.
Foreign tourists purchase goods in India, made payment through foreign currency. Is it IGST sales or CGST sales? Address of recipient mentioned in where to enter the particulars about ineligible ITC already disclosed in 3B in GSTR 9.
See, 7.
The table in table 7, A2.
In table 7, table 7 heading is total ITC reversed and ineligible ITC for that financial year. So in the table 7, you have to report the same in any of the column depending upon the nature of the reversal. Suppose if it is related to 17.5, you have to report in 7E.
Last year, deferred input claimed in current year. Where to report in GSTR 9? Table 6M or any other table? This question is already answered. Is 9C table 14 optional? See, this optional table and mandatory table, an email will be separately sent to you, sir. We missed to show in GSTR 1 sales incentives income. Where to show in GSTR 9?
See, GSTR 9, you can show it here. Particulars of financial year declared in the next year. So, part 5, particulars of the transaction for the financial year declared in the returns of the next financial year till the specific period. So, in that part 5, you can report in that it is supplied declared. So, naturally, if you are finding that omission, you must have reported in the subsequent GSTR 3B. So, that subsequent 3B, so supplies are tax declared through the amendments. You can use part 5, that is column number 10, and then you can include it, and then you have to pay the tax on that. And also the differential tax payable due to 10 and 11, that is the 14. So that will come payable, and then if you are paid, then you have to include it as a paid.
Okay. As table 8A considers GSTR 2B data, is there any use of table C? The data is to be filled only in table 13. Am I correct, sir? It considers 2B data.
As table A consider 2B data, is there any use of table C? So this data has to be filled in table 30. See, very much essential. 8C is very much essential. See, the 8C is very much essential. Why? Because suppose, see, this ITC you are taking in the next year. Inward supplies. See what 8C says. ITC on inward supplies received during the financial year, but availed in the next financial year up to specific period. So you take a single transaction, okay. That is the company purchases only in the month of March. As I mentioned in this one example, 1 crore worth of goods are coming from Delhi, March, but it is coming in only in the next year, next financial year, April. How you will show it in your 3B? You will show it in 4B, 4A5, and then you will reverse it in 4B2, temporary reversal. So the ITC that goes to the credit ledger will be 0. So amount will get populated in 4A automatically from 2B as 18 lakhs. 1 crore, 18 lakhs will get populated. Then amount as utilized credit. So to the extent of 18 lakhs, which you are claiming in the next year, you have to put it in 8C. Then only ultimately the 8D will become 0. See, you must try the maximum to ensure that 8D becomes 0. That is very, very essential. Clarification with regard to common credit. See, solar clarify the following. One, in solar plant, even though we receive the bill with GST for any service, charging GST code.
Also an expense.
It's expense. Yeah.
That report severely go and monthly previous expenses.
See, the first one is again common credit. Solar plant, even though we receive the bill with GST for the service or purchase, charging GST to the expense. Yes, see, that is a different issue. You are charging it to the expenses. Naturally, you must charge it to the expense. But how to report? See, now the crux of the 4A5 in GSTR 3B should come from GSTR 2B. So total ineligible credit also should flow from GSTR 2B in the 4A5, and then you have to show it in 4B1. Then only we can convince the department any investigation is taken. This credit you have permanent reversal you have done in 4B1. So you have to fill 4B1. So because I have taken it to the directly, and then see, suppose that ITC to the for the solar energy comes to 10 lakhs. Naturally, if you can omitting that 10 lakhs, you cannot put it in 4A5. Once it comes in 2B, you have to take that figure in 4A5, and then only the further adjustment has to be done.
And regarding the question related to reporting of exempted supply in GSTR 3B, the sale of electricity, you will be raising an invoice at some point of time. So at that for GSTR 3B of that particular month, you have to report the exempted turnover. Otherwise, it might be treated as an unreported turnover. That is also possible. So monthly return itself, we have to report exempted supply.
Table 8A of GSTR 9 consisting all eligible and ineligible. When eligible ITC and ineligible ITC disclosed through GSTR 3B. GSTR 9. Yes, ineligible ITC disclosed through this one has to be disclosed in GSTR 9. So in GSTR 9, see, if you see this one, 8, F and E, ITC available, not available, ITC available, but ineligible. So in that you have to show this ineligible ITC.
IGST sales wrongly shown as local sales, and CGST and SGST was paid. Now interhead difference appears. How to rectify the same?
See, just you put it in the actual manner so that there will be a negative figure. See here, IGST sales wrongly shown as the local sales. So here there will be demand in one IGST, and then there will be excess in IGST and SGST. You can say there is only a difference. There is no tax payable or like that. You can avoid that.
whether invert HSN summary to be reported in GSTR 9 to be filled for financial year 23-24. Invert HSN summary is not mandatory, but outward HSN summary is mandatory. It should be reported in GSTR 9. So I think we have managed to answer most of the questions.
Yes. Yeah. Again, thanking for all the participants. Their questions were very this one. See, the only question that remain unanswered, in my opinion, is with regard to the quantum of penalty for delay or non-filing. Late fee will become applicable. Whether any penalty or this one, we will get back to you with the correct figures. What is the quantum of penalty? So the important criteria that I would say is table 8. Table 8 is very crucial. So in table 8, if you are putting this one 8A is the auto-populated figure. This auto-populated figure, that is 8B plus 8C should match, and then 8D should become negative. Suppose here it includes the ineligible ITC. So ineligible ITC, see, this is the form which was designed in earlier, and there was no subsequent, many amendments have not been carried. See, the method of filling the GSTR 3B has gone and drastic change from 2022. So previously you were taking from the books from 2022, I think August or November, something August and September. The criteria is to take the data from GSTR 2B. Once you are going to take the figure from 2B, so 2B, then naturally all the figures will be getting populated. So you will be taking the figures from 2B and then you will be adjusting all the details. So if at all any difference comes, it should be same with regard to ITC ineligible. See, suppose the ITC, your car purchase is also getting auto-populated in 8A, and you have shown only the eligible ITC in 6A, and then to the extent of your ITC that is getting auto-populated for car purchase, which is an ineligible ITC, will be showing a difference, and then you have to put it in ITC available but ineligible. So the table 8 is very important. So kindly fill up this table, and this comes from table 6. So there is a proper correlation, and then ensure that there is no demand created due to this, because whenever there is the department finds that you have claimed more ITC than what is populated in GST at 2B, actually notices will come. That has to be seen very carefully. So thanking the participants for this session. Thank you. If at all you got any further question, kindly send us a mail. We shall be glad to answer this.
Thank you everyone. Wish you a very good filing season. GST annual return filing season.